So age is one important factor in terms of how you're evaluating investments, but your net worth is as well, right? When you are just starting out at a 10K net worth, and we've all been there, you cannot take the Hail Mary bets, right? You can't just risk it all in one investment because that's all you might get is just one investment. So that's why that's important to consider as well. And you'll see that the typical investor, less than $1 million net worth, most of their net worth is tied up in their primary residence and their retirement accounts, right? Their stock portfolio might not be that much. This might be obviously different depending on your net worth. If you're closer to that 10 million bracket range, your stock portfolio is a considerable amount. But as we move from the 10K net worth to the $1 million net worth to the $1 billion net worth, you'll see that primary residence is a smaller portion of your net worth. How many primary homes are you going to have? And retirement accounts are a smaller portion of your net worth as well. What continues to grow is stock portfolio slightly, but more so business interests. So we've all talked about we all know stock market investing, but what we all don't know as much is investing into private businesses. And that's what we focus on at Clive Capital is investing into these private businesses because we see that those who are worth 10 million, 100 million, $1 billion, ultra high net worth, more and more as your net worth increases, your allocation into private businesses is the largest component of your investment portfolio. And when we say business interests, that can include small businesses. It could include real estate, private lending, oil and gas, all of these things that we do. That is not just residential real estate or your primary house.
Yeah. And
And
that,
go ahead.
go ahead. No, go ahead.
I was going to say that's seeing this graph. This is how we position our investment portfolio as well is when you want to get good at something, you look at what are the professionals are doing. We see that the professionals, the people who are billionaires, are putting their money into businesses, whether it be their own or someone else's. And so that's what we want to do as well.
What I was going to say is, if you look at the transition between 1 million and 10 million, that what stands out is that yellow portion, the retirement accounts, shrinks pretty dramatically, right? And then, of course, the businesses increase pretty dramatically, but it does shrink. And so it's interesting. Obviously, stocks, as you earn more, potentially you will be able to invest more and that'll grow. But because the retirement accounts shrink, that is pretty telling. Now, we do have ways, of course, to invest your retirement accounts into these business interests and private equity that will help grow those retirement accounts, but invested in business interests. So that's a bridge between the two that you will be able to grow your portfolio and be able to grow it much more quickly than traditional public equities that are earning historically 10 to 12%, maybe a little bit higher in the last couple of years. What we've seen in this year alone, the public equities have just been very variable, and so you can't rely on that.
Yeah. And I think one other thing I'll point out here is that mutual funds are included in here as well. So you could include that to be a part of your stock portfolio, but you'll see that even that amount again at 10 million is the max and then it starts ever so slightly decreasing and it's only the private business interests that continue to grow as net worth grows. And so that's where we want to allocate our efforts as well, and that's where we do allocate our efforts in terms of finding private businesses we can invest into for ourselves and on behalf of our investors.